Okay, welcome back here to wrap up the weekend edition of the Korelin Economics Report. I'm Al Korelin. Appreciate you joining me. This segment, as all of the other segments this particular weekend, have originated in Indian Wells, California, at the Cambridge House California Investment Conference. It has been a really, really great couple of days. Had a chance to relax a little bit, chat with colleagues, and really basically learn a lot, which is very, very important to me, certainly, as I know it is to you. Sitting here right now with John Kaiser. John is a guy who I've known for a long time. I run companies by John on numerous occasions to get his opinion. He has a newsletter, which is, their banner is on our homepage, the Kaiser Bottom Fishing Report, one of the better newsletters out there, I have to add. John and I were chatting off the air a little bit about what would happen, what would have to change in the environment during 2012 for exploration stage companies to come back in vogue, for lack of better terms. John, what do you think?
Well, one of the things that I think is going to be a key theme this year is the M&A that we've seen start to escalate last year will peak out this year. The markets are going to become more comfortable with current precious and base metal prices as part of the new reality. There'll be an inflection coming where the low pricing that we're seeing in the equities will start to turn around. It'll start with the more expensive companies, the producers, and the big major producers, and they'll start wandering down the food chain. And because their paper will be increasing in value, they'll be able to aggressively bid for the other companies. And unfortunately, as the general public gets the idea that this resource sector is the place to be, all these deposits that the juniors have been laboring on for the past 5 to 10 years will have been swallowed up by much bigger companies. And that, I think, is going to lead to a revival of old-fashioned discovery-oriented exploration. Could start later this year, but I think 2013 is the year this will escalate. So I think now, if you're a bottom fisher like me, now you start looking for that. And I've actually found some very interesting, quite cheaply priced exploration plays at this conference.
Well, you know what? I want to chat about that a little bit. We have some companies that we're involved with that I think are really great takeover targets, and a couple that come to mind would be both Orex and Orco. I think both those companies will be taken over, and I think that there's some money to be made there. Now, I have to say, in the interest of full disclosure, both those companies are sponsors on our website, number one, and number two, I'm a shareholder, so this is not anywhere near arm's length information. Remember, this isn't investment advice, you guys. Neither John nor I are registered investment advisors, so what we're suggesting is there may be companies that you may want to take a look at and do your own due diligence, because that's really the only way you're going to get what in my opinion is be able to make valid decisions. Give me some ideas.
Ideas of stocks?
Sure. Well, companies do you think are takeover candidates? Don't want to put you on the spot.
Not so easy to do off the top of my head. But for example, Geologics is one that's a copper gold type story, and it does really well if both gold and copper prices remain strong. So this company will finish its pre-feasibility study middle of this year. We'll see the new numbers, and the interesting thing is they now have a new exploration dimension coming in because they drilled beneath the pit limits and got 3 to 4 times higher the gold grade. So with plays like this, they go from being of interest to a mid-tier type producer to potentially being a top-tier producers type of acquisition target.
Well, it was interesting what happened to a friend of mine's company. Was taken out by New Gold, if I'm not mistaken, at the end of last year, and I felt at the time that was just a harbinger of things to come. And interestingly enough, John, I have had a number of people at the show come up to me and say, what do you think are the best takeover targets in your mind for 2012? Because they agree with you. I mean, they are firmly convinced that is going to be the main activity that's going to occur this year.
Some of these bigger producers such as Alamos, Alicer, these companies are the kinds that the really big guys will have to take over. The Barricks and Newmonts, they want big ounces, but they're only finding that in copper gold systems. There are not a lot of 6 million plus ounce primary gold systems out there. So they will start looking at these mid-tiers, which have a number of pretty good-sized gold mines, and they'll need to aggregate their ounces. Rather than having a few very large deposits, they're going to go and start building up their portfolio. Even though that adds complexity and overhead, the market will want lots of production coming down the road, because with these strong gold prices, there's a lot of cash to harvest.
A couple of companies that I think are prime for takeover, one being a sponsor, one not being a sponsor, but a company that I met here, interestingly enough, about 4 hours ago, is a company called Northern Gold. Northern Gold right now has officially 1.1 million ounces. They are estimating that when their 43101 numbers come out for 2011, and they will be out within within a month or so, they're thinking that number will probably double. To me, it's a very, very interesting situation, and right now the stock is pretty cheap. The stock is like 30 cents right now. So in my opinion, just from the discussion that I had with them and from the person who referred the company to me, I think that's another one. Otis Gold in Idaho, I think, is another good idea. Good idea of a company that's got a proven deposit that I think probably also somebody will take a run at them too.
The interesting thing about companies like Northern Gold is what's happening is old high-grade gold systems, which nobody's really interested in developing anymore, are now being rethought in terms of the much lower cutoff grade that $1,700 gold allows. So they have to redrill these old deposits and assay the stuff between the veins. And in a lot of cases, it's working out to a bulk tonnage, open pittable type of situation with a lot more ounces than the original high-grade vein boasted in the historic results.
That is pretty interesting. You raise a very good point about gold at the level it's at right now. Things that were absolutely as far away from being economic as they could possibly have been just a few short years ago today are very, very economic. And I don't know about you, but expanding this discussion in a bit of a macro sense, I don't see the price of gold and silver diminishing, John. I really don't. And that's based not on technicals or anything, simply fundamentals.
Yeah, the fundamentals I refer to is I look at all the gold that exists, which is about 5.4 billion ounces. What is it worth right now? Well, I divide that by global GDP, which has been growing and growing, and that's 12% of GDP. In 1980, when we were very stressed out about where America was going and gold hit 850, it was 26%. I think we're in a long-term period of transition where the Asian markets and that economies are coming on stream. America is going to keep growing, but it's going to decline in relative terms. And with it comes, a diminished ability to be the police cop that keeps everything in order. And that represents structural anxiety. People are worried 10, 20 years. What is the geopolitical landscape going to look like? So it just makes sense to own physical gold, and for the so-called poor man's metal, silver, and just put it away. Don't buy it for capital gains. Just own it. And if you inflation adjust $400 gold from 1980 to the present, it should be about 1,026. So we're looking at a 60 to 70% real increase right there. That's what's so big for the juniors, but the market's still thinking gold's going back to 1,200. I don't think it is, and when they accept it.
No, I agree with you 100%. I don't see how it can, and the final argument that I would make here for that is an argument that I made in a panel that I was involved in this morning at the show, and that is the Chinese are not stupid people, and the Chinese are the largest producers, and if I'm not mistaken, the largest importer of gold in the world. They're not doing it because they like the color. They're doing it because it is a very sound financial decision. Been chatting with John Kaiser. Good guy. He'll be on the show more often in the future. You want to get some information on his newsletter? Click on the banner.